When people would tell me that US LLCs are a complete no-no for Canadians, period, I would just follow the herd until I opened my own LLC and found this one solution that completely changes the game. And let's discuss that right now. Hey guys, have you gone online and searched for why LLC is bad for Canadians? And you get a ton of articles on Google saying a Canadian should never open an LLC, period. But here I am, a CPA based in Toronto, specializing in US taxes, telling you why that's wrong. My name is Sal, and here's why you should open a US LLC. First off, who can benefit from a US LLC? US e-commerce store owners, freelancers with US clients, consultants with US clients, and real estate property rental owners that don't actually own a property, but they're just doing arbitrage, or anybody who has a consistent US-based income that doesn't fluctuate year on year. This is important. I'll come to this why. Let's first discuss why the people that are saying this, why are they right and what are they right in? Let's take a little bit of a history lesson. The US-Canada tax treaty was signed in 1980 in Washington. When was the first LLC opened? It was opened in 1977 in Wyoming. But it didn't even get recognition at the federal level until about 10 years later. And the second state to ever open an LLC after Wyoming was, I think, Florida or Delaware, like 12 years later. So by the time this got popular in the US, it was actually in 2000s. And the US-Canada tax treaty had been signed way back in 1980. So there was no mention of this. The problem is that in the US, the LLC is taxed as a pass-through entity. The income flows through to your own personal tax return, and it is filed as Form 1040 Schedule C, which is basically the same as self-employed income in Canada. In Canada, they literally treat it as a limited liability company. So it's taxed as a corporation. So on the US side, they ask you to pay your tax as an individual. The Canadian side, when you want to claim foreign tax credits, which basically just means taking a deduction in your taxes for the tax you already paid to a foreign government, the IRS. When you try to do that, they say, well, the corporation never paid that tax. It's you who paid that tax. So where is the corporation's tax return? You can try all you want to prove to the CRA that the tax you paid in the US was actually for that LLC. They will not care. It sounds stupid, but it is what it is. So the people saying that LLCs are bad, they're true. They're right. But they're missing the huge component, which I found out myself. The secret word is management fee. A management fee is basically you charging the LLC a fee for doing your work for it. Right now, as an owner, you don't charge the company anything, right? But imagine if you could charge the company for doing its operations, for handling things, for making decisions. That's exactly what a management fee is. You as a Canadian or your Canadian corporation, if you have one, can charge a management fee to the LLC and basically nil out its profit. So if it's got no profit in the US, it's got no tax to pay in the US. If there is no tax to pay in the US, you're not taking any foreign tax credits. And basically, there is no double taxation. So let's take an example. If you have $100,000 of income, you have $50,000 of other expenses, and now you've got $50,000 of profit. And that's where you pay tax on it and you get double tax in Canada. Well, what if you could charge $50,000 of management fee and make it zero? So then the tax filing that you do in the US is basically a big fat zero. There are a couple of things with this though. The management fee you charge has to be one, reasonable. You can't have $500,000 of profit and you hardly do any work for the LLC and you're charging a $500,000 management fee. You have to be consistent month over month and year over year. So for example, you estimate at the start of the year that my profit is going to be $200,000. You charge at roughly a $20,000 management fee every month and you actually pay that out to yourself in Canada. So then if the IRS were to ever ask you, you could definitely support this saying, this is a consistent amount, it's reasonable. This is the work I'm doing to support this $20,000 fee that I'm charging. And I'm actually paying this out to myself. Now that we discuss how to go about this, now let's discuss whether to own the LLC yourself or own it through a Canadian corporation. Owning it yourself is very simple. You can just go online, create an LLC, get a registered agent, or we could do it for you, and Bob's your uncle. Using a Canadian corporation might add a bit of complexity, and I can clear that for you right now. So there is no complexity, but it's going to save you a ton of tax. Why? Because the management fee that you charge from the LLC, you have to declare it somewhere, right? You're going to declare that in your income in Canada. If you don't have a Canadian corporation, you're declaring that as self-employment income here in Canada. Now, your tax rate could be 40%, 50%, up to 53%. I'm talking about Ontario here. With the corporation, you know it's not going to be that high. For example, in Ontario, it's only 12.5% corporate tax rate. So the management fee income, if you say $100,000 of income, could be $30,000, $40,000 of taxes in your personal name, or it could be $12,500 if you have a corporation. So if your profits are small, you definitely can go for putting it in your own name or if your profits are larger or they're going to get larger, you want to open Canadian corporation and hold the LLC below it. How do you do that? When you ask other people, you're going to get lots of different answers and it's going to confuse you. But it's actually very, very simple. When you create your LLC in the member information, member literally just means owner, you just put your Canadian corporation's name. When you do that, the operating agreement that comes out is going to be in your Canadian corporation's name. Yes, you will still have to report your name somewhere, which is called the beneficial ownership. That's just a FinCEN requirement. The US government has this requirement. But for all effective purposes, the Canadian corporation will be the owner of the LLC, right? If you already have an LLC and if you've not done that, that's fine. The management fee can still go to a separate Canadian corporation, which is not owning the LLC. That's completely fine. And to be honest, a lot of times we just do that for our clients. They just own the LLC themselves and they have a Canadian corporation on the side, which just flows the income to that Canadian corporation. If you need help with any of this stuff, or if you want to talk about your unique scenario, happy to discuss. Hi, hope you're liking the video. If you'd like to get notified when I make videos exactly like this, the best way to do that is to hit the subscribe button. Your support and your encouragement will mean the world to me, and it'll make sure that I have the encouragement to keep on making the same kind of videos for you. And on the topic of this, if you'd like me to make a specific video on your scenario, just let me know in the comment section. I'd love to do that. Back to the video. So who should never own a US LLC? Real estate investor. The US-Canada tax treaty says that if you have real estate in one country, which is the US, then you have to first pay tax to that country. Yes, you can charge yourself a management fee. For example, if you have rental income from the States, you can charge yourself a management fee, sure. But the problem here is that you're not going to have consistent income. 1 year, when you sell that property, you're going to have a huge capital gain. And at that point, you can't just charge $500,000 management fee, right? That brings me to my second point. Anybody who has income from the States that's not consistent year over year, or even month over month, hugely inconsistent, I mean, you should not be having a management fee charged to your LLC because you won't be able to have it consistent and you won't be able to support it if an audit opens up. So I'm guessing now you're a bit more convinced to open a US LLC. What are the next steps after that? Obviously, you're going to get an EIN for the LLC because you need that to open a bank account. And for your tax filing purposes in the US, you're going to need an ITIN. I have an important thing to mention here that in 2025, things have changed a little bit on the ITIN side. To get an ITIN, which is an International Tax Identification Number, you have to get a certified copy of your Canadian passport to submit to the IRS. The Canadian government has changed how they issue certified copies now. It's still just going to their website and getting it, but they now do not emboss the copy that they sent to you. And the IRS is not used to seeing that because it's a new process. So they reject your ITIN application. So what you're going to do is go to the Service Canada website, get your certified copy of the passport. When you receive it, you're going to attach it to the regular form for ITIN, which is called W7. But you're also going to print a page from the Service Canada website, which says that we no longer emboss copies. So that's going to tell the agent in the IRS that it's okay to accept a copy of the passport without the embossed logo. Final thing, tax form. So for a US LLC, you're going to have a 1040NR, which is a non-resident personal tax return in the US. You're going to add form 8833, which is a treaty-based election for the US-Canada tax treaty. You're going to talk about Article 5, which is permanent establishments in that tax form. And you also have form 5472, which is any US corporation or LLC owned more than 25% by a foreigner. Please be very, very careful with this form. Finding it wrong, filing it a day late, or forgetting to file it actually will incur you a $25,000 penalty by the IRS. And that is an automatic penalty. You can't do anything about it. On the Canadian side, however, it's much more simpler. You just have to file a basic Canadian tax return for T1, or if you have a corporation, a T2, and report the management fee that you charge. So to wrap it up, LLCs are completely fine if you know how to use them, but make sure you're getting all this documentation, getting your ITIN, making sure that your application is good to proceed. Get a good virtual address for your bank application. And yes, if you're small, go with directly owning it. If you're big, have a Canadian corporation so that you're saving tax on the Canadian side. Let me know if this has helped. If you have any questions, drop in the comment section. I'll be sure to answer them. Thanks for watching and see you in the next video.